This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, welcome back to a brand new episode of the Smart Property Investment Show for 2023, one of our first episodes back for the year. Super excited to do it all with you all over again. The next 12 months are going to be pretty crazy in the best way possible. I recently sat down with the Real Estate Institute of Australia President Hayden Groves, and he gave a really good insight into what investors can expect from the year ahead. So I figured I should share it with all of you as well. I hope you enjoy. Hayden, thank you so much for taking the time today.
Grace, it is always lovely to chat with you, and thank you so much for the kind invitation to have me part of the program.
You don't know this yet, but you were actually the most listened to episode for REB's Secrets of the Top 100 Agents in 2022.
Well, that's extraordinary. And it sounds to me like, Grace, you might have to do a bit more work if I'm going to be the highest listened to. But that's tremendous. I'm glad that real estate agents are interested predominantly in the work of the REIA, which of course is, the group that I represent as its president. So, that's very heartening to hear. Thank you.
Yeah, I will say, what was really interesting from my perspective anyway, was we did release that episode pretty much down to the day, same time period last year, and it still got the most hits over 2022. So normally we get, the more topical things sort of like as they occur during the year, and you've held on to that top spot for the whole year.
Well, let's see if somebody can break it.
We can try and make this one the one that breaks it, Hayden. So that's why as well, I was like, we need to get you back on it. You've been in that top spot as president of the REIA for 12 months now, pretty much down to the day, since it was 12 months since we talked to you for this same program. And I'm curious to hear what this year's been like for you.
Look, it has been an interesting year of transition for real estate practice, hasn't it? We've seen most markets across Australia reach their peak throughout 2022 and, start to slide back a little, particularly in those markets that experienced such strong exponential growth during those stimulus years associated with the COVID pandemic. And so, we're seeing Sydney and Brisbane in more recent times start to pull back a little. The Hobart market still relatively strong, but coming back, so there's really only year-to-date figures, there's really only Adelaide and Perth that are sort of still keeping their nose above the high watermark in those markets. But otherwise, 2022 was a rising inflation, really a lot of uncertainty with the war in Ukraine, around commodity prices. So a really interesting period of time for real estate practice. And then, of course, you've got lots of legislative impacts and changes. And we had a new government, of course, new federal government, and first time ever that we've had a federal housing minister sitting inside the cabinet. We've got Treasurer talking about building a million affordable homes in 5 years' time. So there's a lot on the political landscape as well. And of course, the work of the REIA has expanded in more recent times to have a bit more of an inclusionary process through the Queensland market, of course, with the REIQ currently not members of the national body. So there's been a lot going on for the REIA and a lot going on in the market. And I'd imagine 2023 will be just as interesting as we proceed that way.
And we'll get to 2023 a little bit later, but I just when you just listed all that out, it's easy to forget just how much craziness there has been in the last 12 months. Could you have anticipated, half of those things you just talked us through, Hayden?
Well, I guess, with the pandemic, it was going to have to come to some sort of a conclusion in due course, wasn't it? And 2022 was the year for it. It's still here, of course, with us. And it's amazing to think back to, in those early years or early days of when the pandemic first broke and, the lockdowns in Victoria and, those sorts of experiences will stay still fresh in the minds of many people. But there's still a lot of people with the disease and still there's a lot of people still suffering from the after effects of having had it. And, family members have lost loved ones. And, it's been a really extraordinary time in our history. But what was most extraordinary, I think, about it in terms of the property market context is that nobody really predicted that we were going to see such stratospheric increases in property values in nearly every capital city and particularly in the regions. And it significantly changed the way that we reside in homes. That I think is an amazing part of that process. That work from home push that suddenly became a thing, and people wanting to look for homes that had that capacity to have separate study. And so we changed our buyer behaviour. We moved to the regions more than we have in a generation. And I think most startling too, of course, was this rental crisis that is often talked about. In every jurisdiction in Australia, and we just had our REIA board meeting in Canberra last week. And when I'm talking to every state and territory director around that table and invite them to share their experiences within their state in the last quarter, they're all saying one thing. There's one common theme. Lots of other things that we all differ on, but there's one common theme in Australia right now, and that is the severe shortage of housing stock for rental accommodation throughout Australia. And that's a real problem that I think has been neglected by state, federal and local governments for too long, and now really it's starting to bite and bite in a big way. And I think it's the challenge of our time as a real estate industry, and the challenge for government in policy settings to get enough houses for Australians, particularly in the rental sector. And I think that's the biggest outcome of 2022, if you like, in terms of a policy position. And we must address it, and we must address it right now.
So what is already being done, Hayden, when it comes to that rental crisis by yourself, by other groups? Because as you said, it's not something that's going to go away anytime soon. Well,
we just don't have it. It's been a supply issue for a long time. And what's been happening is that, the federal government looks to the state government for housing supply, generally speaking. Federal government can provide some funding, of course, and can provide things like first home buyer grant funding, and which, can filter down onto the states, or the states themselves often use that sort of lever to get more stimulus into the market and get more first home buyers into the market, which normally does translate into providing more rental stock, because of course first home buyers are often renters. And then they, of course, transition into home ownership, and then that will provide enough, will free up the supply in the rental sector. We haven't seen that in more recent times, even though there has been very strong stimulus, particularly for first home buyers. I think the typical sort of mum and dad investor, which is, of course, represents the overwhelming majority of housing supply for renters in this country. If you, by the numbers, about 3% of all housing stock in Australia is provided by government, owned by government, so social housing effectively. 27% of it is provided by the private sector. And then the rest of it is owner occupied, or the bank, or somebody paying back the bank to own those homes. And so 27% is a very large portion of the housing sector. And of that, 80% of that is owned mum and dad investors who own one residential property that they rent out. And I think with the rise of superannuation, people are now, instead of buying perhaps a residential property, are looking at alternate means to invest, and perhaps they're using their superannuation funds to focus on funding their retirement rather than using property as a vehicle for funding their retirement. But also too, we've seen states and territories mess around with residential tenancy laws, and we've seen really high increases and rapid increases, like the ACT, for example, have increased their rate of land tax for property investors substantially. We've seen the Victorian government introduce pretty strong pro-tenant residential tenancy laws that have turned investors away from those markets, where investors are thinking, well, I've really just got no more control over my asset anymore, or not to the level that I'm comfortable with. And so agents are telling us in Victoria, for example, that they're selling out and that we're losing properties out of property management portfolios at a rapid rate. And so that's fueling this supply problem. And so I think governments have been focused on protecting on tenancy protections first and foremost in an effort to try and make rental accommodation more affordable. But I've got to say, I don't think it's worked. I think what's happened is it's just constrained supply. And the more you constrain supply, the more rents rise because of natural competition in the market. And so now, of course, unfortunately, what's happening is government's saying, okay, well, let's put a rent freeze. I mean, we had the Greens Party talking about putting a freeze on rents for the next 2 years. Well, that would just make the problem worse. More landlords just say, well, now I can't even get a fair return for my investment, so I'll look for alternate vehicles. So I think there's this tension that's developed over the years where it's been a focus on consumer protection, which is right. I mean, you have to, of course, evolve in consumer protections. But I think residential tenancy laws generally around this country have been pretty good before all the changes were made. And I think that's really fueling this supply crisis that we currently have, which of course is pushing up rents And therefore, as a result, you're seeing a lot of tenants just not being able to meet their obligations under a lease. It's a significant challenge.
I have plenty more questions about this rental crisis, but we're going to go to a break first. See you on the other side with more of Hayden Groves. Welcome back. I'm joined by Hayden Groves, REIA President and the Principal and Director of Dethridge Groves over in WA. And we are operating on a time zone difference here, Hayden, but so that makes me even more grateful to have gotten your time today, because you must be so busy holding both of those roles.
Look, yes, it is sometimes a challenge, and I must admit that occasionally I get the time difference wrong.
Fair enough.
Yes, and I'm calling people in my late afternoon, and I'm surprised when they answer the phone and I can hear restaurant music in the background because the poor have interrupted their dinner. I feel terrible about those sorts of things. But it is a challenge, and particularly with the way that the commercial airlines are operating at the moment with delays and flights and all sorts of things, it can be a bit of a challenge getting around at the moment.
Absolutely. Hayden, just before the break, we were talking around the rental crisis, and I still do have a few questions there. And one of them is simply, given how much we've seen some of those changes within the residential tenancy laws lately, do you think that's a trend that we're going to be seeing even more of over the coming years?
Yeah, good question, Grace. I actually think that governments are a little more sensible than the populists give them credit for. I know that's perhaps a naively optimistic view of our politicians, but I do think that they are listening to industry. Certainly the REIA has a tremendously effective working relationship with the federal government and the Honourable Julie Collins, our housing minister, and other related ministerial portfolios within the Albanese government. And we're very grateful for that opportunity to highlight some of the challenges that are evident in the market, and that includes rental supply, with those politicians and with the Albanese government. We feel as if they do certainly listen to our point of view, and they listen to many others as well, of course, and there has to be a balance with these things, certainly. But they do seem to understand that the supply side of the equation is the challenge of our time. And, we've had the Treasurer, of course, announce in his budget a few months back that they're looking to build those 1 million more homes, and they're looking to expand or introduce superannuation funds to play in that build-to-rent space. And that's going to help, but it's not the entire solution. And the REIA is very mindful and has certainly put the government on notice that we'd not like to see preferential treatment for large institutionalised investor groups, including superannuation funds, over and above the benefits that mum and dad investors get in the residential property space, because they are the ones that have been housing millions of Australians for generations, and they should not be left behind in this process. And of course, as we know, there's time constraint on construction. There's, these build to rent schemes are not the panacea of increasing affordable housing supply in this country. They are traditionally used in circumstances where they are more of a bespoke concierge type service for lifetime tenants, where you can get your dry cleaning done, for example, in your building that you live in, that American model. They're not designed for affordable housing. They're more of a luxury end product. And so we are very much keen to prosecute our arguments with the federal government. And as I say, I'm pleased to say that they are listening to that. That filters down into the states. I think the states, no state really, apart from the Perrottet government in New South Wales, is flirting with this notion of around stamp duty reform. But if you really want to free up supply, there's many levers that you can pull. And we've long advocated to axe the tax, that the stamp duty reform is such an important component of unlocking more housing supply. And that includes the rental supply in the market. If you can incentivise investors back into the residential sector by giving some, meaningful stamp duty reform and stamp duty relief to investors, then that would happen overnight. You'd get instant increase in investor activity, and you'd be able to supply the market with more residential stock. And that would address the affordability crisis far more quickly than an elongated program of encouraging superannuation funds to build these large build-to-rent buildings that are going to give houses to people. Yes, that's very true, but it's going to take many years to achieve that. And there's going to have to be some sort of a guaranteed return, which of course will end up costing the taxpayer. So I think there's some far more sensible, more expedient levers that can be pulled, particularly from state governments around stamp duty and land tax, which would meet the supply constraints that we currently have in the market.
Speaking of that axing of stamp duty, it does feel like, from my perspective, you would be much more on the ball with this than I am, but it does feel like we have reached an interesting period of cooperation amongst all the states. And we have heard a lot of people say that, stamp duty needs to kind of be a nationally addressed problem. It's not something that's isolated to one state or territory, and it would be much easier to be overhauling it if we are taking that national approach.
Oh, look, I think it's important that, it is obviously a state-based tax. I actually think, Grace, that a brave state could really get the jump on the rest of the states around Australia. And we know that there's always, even though there's good cooperation amongst the states, there's also a bit of healthy competition amongst them. And I think if there was one state that came out with substantive reform around stamp duty, and there's lots of different models that are out there that we can talk about today, but, we don't want to perhaps bore your listeners too much with the detail on those policy platforms. But I think overall, if there was a genuine effort to reform stamp duty, they need the revenue of the states. We get that. It's a substantial part of a state's revenue base, billions of dollars. I think the latest figures coming out of New South Wales is calendar year alone, they've collected nearly $25 billion in stamp duty. So you can't just give up that revenue. The state can't give up that revenue if they're needing to fund, hospitals and schools and all those other important services that a state government provides. But if you could find a happy medium there, and I teased the federal treasurer with just increasing the GST by 2.5%. That would perhaps fund the removal of stamp duty for the states and just distribute that back to the states. That would solve the problem from a national perspective, perhaps. But certainly, I don't think there'd be any appetite for that at the moment. So look, it is going to be a challenge, and we're going to keep the pressure up on governments to reform it. Because it is a significant barrier for people moving around this nation looking for better schools for their kids and better opportunities for their work. It is utterly unfair that you've got somebody that wants to move to Queensland from New South Wales to get a better lifestyle opportunity or work opportunity or education opportunity for their children, and they're slugged a stamp duty every time that they move. Of course, it is a constraint it's a brake on our economy. And that's why we need to have this reform discussion and make sure that we continue to have it.
I like that you brought up brave as well, because we have seen some dalliances in the reform of this space, but I guess most notably would be New South Wales bringing in the changes for first home buyers. But that is quite a small part of the whole pie, really, isn't it?
Look, it is, but it is a start. Speaking with our member friends at the REI NSW, their view is that perhaps it's just another bad tax after an existing tax, and I think the modelling of it could perhaps do with some improvement. But it is a start, and I think that at least it's one government that's looking to see if they can evolve in this space. And that's one step forward in that regard, and that's why the REIA is pleased with it as a concept. But you could certainly have a system whereby something where the purchaser makes a decision, makes a choice, whether they pay all of the stamp duty up front, a bit like the old HECS debts, or the health debt, or the property, or then the tax, the stamp duty tax would just carry forward, connected to that person, not the property, connected to that buyer over the life of that time that they're in the property, and they pay it off over time. And it could come at a small price to do that. Perhaps there was a 2% levy or something like that. And so, given that there is like a health debt for higher education is managed for hundreds of thousands of Australians every year, then I think governments have proven that they can manage these processes, and that would free up a lot of supply into the market if you had some sort of model like that, where the choice was the buyers or pay it all up front, perhaps with a discounted rate, or perhaps pay it off over a long period of time. And if you move and sell that property, then the debt just carries, that's okay, but the debt just carries with you and then is removed from your estate at the end of your time. So I think there's models like that could be developed over a period of time.
Something I'm sure we'll be discussing a lot more throughout the next year or so, Hayden. So we might move on from there for now, but obviously we'll keep that discussion going. But another tax that I do want to talk about is something that we saw this year, and that was Queensland's very controversial choice to bring in a land tax that it's been shelved. It doesn't exist anymore, but it was a huge topic of discussion for much of the year.
Well, I think the Queensland Treasurer probably would regret introducing that idea, given the way it ended. Particularly, it was the other states said to the Queensland Premier that, no, we're not going to play in this sandpit. Thanks very much. We're not going to be providing you the information that you need in order to collect this tax. Look, a pretty, we used that phrase brave before. It was a pretty brave decision politically from the Queensland government. And, and I applaud the work of the Real Estate Institute of Queensland and certainly the work of the REIA was also, we lobbied hard and worked pretty hard to make sure that we got the government to see sense on this matter. We certainly were assisted by the other states treasurers who said, look, we don't think this is going to fly. And then notwithstanding even the constitutionality of it, I think that was going to be the next question to be asked in the process. And that would have been deeply embarrassing for the Queensland government had it been found to be an unconstitutional tax that was going to be illegally collected. And it was for what, $20 million or something it was going to raise? I mean, it was chicken feed, right? It would have seriously damaged the supply. We actually had, in my capacity as principal of my real estate business, we had one of our owners who owned property here, large asset here, who instructed us to sell it because they also held assets in Queensland and they were so concerned about the tax coming in that we sold that asset, and that was housing a family of 4 people. That asset had a reduced market rent because they'd been in the property for many, many years and looked after the home very well. And the owners were magnanimous types and were looking to try and help this family out. They said, look, I'm sorry, but we're going to have to sell the asset. So we did sell it. That family then had to move all their kids away from their local school as a result because they could no longer afford to live in this area. They had to move further afield for the rent. So, there's consequences of these things, and most of the consequences around these sort of higher taxes, stamp duties, higher land taxes, changes to residential tenancy laws, they all feed into this disincentivizing of mum and dad investors buying residential property to house Australians. And that's the reason why we've got vacancy rates sitting around 1% nationally.
We'll go to a break pretty soon, Hayden, but just before we do, because we're going to be talking all around 2023 and what's still to come, do you think we're going to see, any more incentives over the next 12 months to maybe get some of those investors back in the market? Like, are there any short-term fixes or measures that are in place where we'll start to see any of that trickle through?
Look, I don't see any on the horizon immediately. I mean, there is some, the West Australian government, for example, has, a stamp duty rebate system for off-plan properties that people are buying, which is, again, to really stimulate the construction side of the economy, which frankly doesn't really need any more stimulation in my view. I think that's stimulated enough. But at least it's something that's, trying to get developments out of the ground, which does feed into this supply issue. But, the take-up of it is moderate. It's not substantial. So I think federally, the federal government, I think, because of the 2 previous election cycles, there was discussions, of course, as we know, quite infamously about removing negative gearing and capital gains tax. I mean, thank goodness the Albanese government has shelved that, dead, buried and cremated. If changes to that, we would have been in a much worse situation if in 2019 those changes had come into play, then I think rental affordability would have been far worse. So I think federally, the fact that there is a capital gains tax discount and there's negative gearing for property investment, I think nationally they might feel that that's sufficient to still continue to support the property market in terms of supply from investment perspective. But it's clearly not going far enough anymore. So there needs to be some alternative and stimulus if we want to supply more property more quickly to more Australians.
We'll take a quick break there. We'll be back in just a moment with more from Hayden Groves.
Want to slash thousands off your home loan repayments? Whether you're an investor or homeowner, we know how important it is to find the lender that suits your unique situation and with the best rate. If you've not compared your home or investment loan in the last 12 months, you may be able to cut your repayments today with a different lender. That could mean more money in your bank account and less stress when it comes to paying your loan. Find out why more borrowers are turning to Finny to refinance their home loans. Call us now on 1300 002 023 and find out what you could save, or visit our website finny.com.au to book an appointment.
Welcome back to this episode. We're chatting with Hayden Groves, Principal and Director of Dethridge Groves and President of the Real Estate Institute of Australia. Hayden, it's been so great to get your insight on basically everything that's gone down for the last 12 months. And it does make me realize just how crazy this year has been. Like I knew it was crazy and it's felt crazy the whole way through, but just to be having this conversation, you just sound so cool, calm and collected about it all. But It's been a chaotic year.
Oh, look, it has, Grace. It has been an extraordinary year for real estate practitioners around the nation. It really has. And I've got to say, most real estate businesses have done pretty well in 2022. I mean, we did see, obviously, markets start to transition, particularly in those areas like states like New South Wales, Tasmania. We did see, those property values start to retreat. But on the whole, values have held up pretty well. And it goes back to this supply issue. Obviously, we've been talking about rental supply, but also housing supply more broadly. Good quality family homes in good, strong locations are still under very high demand across the nation and are getting snapped up despite this rising interest rate, higher inflationary environment that we're living in now. There's a lot of competition for those assets, and people are prepared to compete for them and pay handsomely for them for a home that meets their family's needs. And so agents are complaining generally, a bit like farmers, I guess. There's either too much rain or not enough rain for farmers, but same with real estate agents. There's the major complaint across the country is there's just lack of supply. Listings are very tight still. It's hard to get stock. And that's playing out across the nation, which is interesting when you've got falling home prices in most states now. That's an interesting phenomenon to have working at the same time. And that's why I think that short supply will actually keep our markets pretty robust in 2023. I don't think we'll see savage falls in housing markets across Australia. It'll be really interesting to see at what point the Reserve Bank decides to stop the increases and try and curb inflation. I do know that federal government's number one priority from an economic perspective is to try to curb inflation. And so the Reserve Bank is likely to carry on raising rates until such time that impact does occur. We are concerned, particularly in those markets where people perhaps bought within the last 12 to 18 months, bought those assets, and now we've seen the values of those assets start to fall away at the same time where a lot of fixed rates on interest rate mortgages are starting to come off and go to variable. And so some, particularly first home buyers, may really struggle where they're facing a negative equity position, but also their rates gone from, say, around 2 and a bit % to maybe 5, possibly 6% on a variable rate. That will be, you talk about curbing inflation, if that happens on a large scale, that will certainly curb inflation, but certainly it will also cause mortgage delinquency to rise and a fair bit of pain in the market. And, we don't want to see that, of course, but it feels as if there's a degree of inevitability around that occurring in the back half of 2023. And that will probably curb the confidence in the market a little, but at the same time, we might see that if rates stop rising and we get some stability in that market and inflation comes under control and the Reserve decides, well, we now need to focus on GDP growth, well, maybe we'll start to drop rates again. That would send a big signal back to property investors to buy again, which would help address our supply problem and things might start to come back into focus again in 2024. So 2023, I think, will be that transition year, where we see interest rates stop rising. We see a bit of pain in certain sectors of the market, the mortgage belt markets, and we might see maybe right at the very end of 2023, investors start to look at the market again. But I think in the meantime, 2023 will be a year of adjustment. We'll sort of all be adjusting to the new normal of back to sort of normal interest rate levels versus the emergency settings that we saw in 2020, 2021. So, really interesting year, 2023, one to watch for sure. But, in some markets where we saw Sydney go 30% in a year, they're not going to lose that growth in 2023, not a chance. I mean, in 2022, it might have come back. In some markets, it's come back 15%, but those markets saw, 40% growth. And so, if it's gone up 30%, you might lose 10 to 15% by the time that the bottom of the cycle reaches its end before it flies back up again, perhaps in 2024.
A great summary there, Hayden, of what we can be expecting from the property market over the next 12 months to 18 months, really, because as you said, it's going to be a transition period. I'd love to switch the attention to you a little bit more now, one of my last questions for today, and that's sort of around, what can we expect from you and not only Dethridge Groves, but your work at the REIA for the next year too?
Well, thanks, Grace. Well, look, the REIA, under our leader, our CEO, Anna Neelagama, she's, really put the work of the REIA back on the map in 2 short years and does tremendous work there. She really does, her and her team, a small team of advocates. When you're walking around the halls of Canberra with her, every second politician and chief of staff knows who she is and says hello. very well connected in with Canberra. And as a result, we have the ear of government, which is so important. And so 2023 for REIA, we will be looking to expand our commercial real estate program, our commercial real estate engagement program. You know, it's something that we've noticed there's a bit of a gap in the market. You know, you've got the big groups like the Knight Franks and the CBREs and those groups who pretty much can go it alone. But the smaller agencies, particularly those that are focused on commercial real estate practice, the small to medium enterprises, small business owners who are real estate practitioners specialising in commercial real estate. Their state institutes do a terrific job in servicing them, but we think that there needs to be a bit more of a national focus on them. And so we've already rolled out in 2022 our commercial engagement program in the major cities, Sydney, Melbourne, Brisbane, and we'll be looking to expand that as the year progresses in 2023. And so far, we're issuing State of the Market report, which was released last week. So encourage all your listeners to look that up, as well as, you know, our housing affordability reports. And so our data and research arm is really in full swing at the moment for the REIA, and that will be looking to be expanded in 2023. We'll keep pressure on government around stamp duty reform, and we'll be making sure that we're getting mum and dad's investors and our practitioners who are made up of small businesses. You know, the real estate sector we look after an asset class. The residential sector looks after an asset class worth nearly $10 trillion. It's the largest asset class in Australia by some enormous margin. We're collecting $78 billion a year in rents. You know, we are a collection of small businesses who do an enormous amount of work and contribute so strongly to our communities that we work in. You know, every tennis club you drive past around Australia, every junior footy club, you can always see a sign out the front that's supported by the local real estate agent. One thing that I really want to focus on for REIA in 2023 is elevating in the minds of our community the value of real estate practitioners in this nation. We do tremendous work, and you hear that comment around, oh, all real estate agents are awful people and they're terrible and they'd sell your grandmother and they're all terrible except mine. Mine's fabulous. You know, and it's an urban myth that real estate agents are a collection of snake oil salesmen not looking after the consumer. It is completely the opposite of that. And that's something that I really want to focus on in 2023 is highlight the beautiful work that real estate agents do for our community each and every day in housing Australians. It's a very important and serious role. And I think on the whole, we do it really, really well.
Absolutely. Big year ahead then, Hayden.
Big year ahead. Just a few things on the agenda.
Nothing too crazy. Well, I hope you get a good break. In the meantime, are you taking some downtime over the holidays?
Yes, hoping to, Grace. Hoping to head up to my little beach shack up in Moore River in Gilberton.
Oh, beautiful.
For a few days over the Christmas break and get out on the river with the tinny with my family and maybe get a little bit of fishing in and some drinks at sunset. It's always just a nice thing to do to break the cycle and hopefully Deathridge Groves will do well next year. We've got some good projects with Development WA on the cards, which is our state developer. We're very proud to be associated with them as their selling agent on a few of their different projects that they do, as well as looking after a good sized rent roll as well, making sure that our owners are getting a good fair return and our tenants are well looked after.
Well, enjoy the break before it sounds like you get into a very, very busy period next year, Hayden. Again, thank you so much for your time. We always appreciate the chat and I can't wait to see what's next.
Lovely to be with you. Thank you, Grace.
Thanks so much for listening in. I hope you enjoyed this very special episode with Real Estate Institute of Australia President Hayden Groves. Thanks so much for tuning in. We'll see you on an upcoming episode. But in the meantime, reach out if you have any questions, editor@smartpropertyinvestment.com.au. Check us out on social media, Facebook, Twitter, and LinkedIn. And subscribe to our website if you haven't already. Make sure you're getting all the latest news. We've got a lot of it coming over the coming weeks and months because it's going to be a big year for property. In the meantime, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
HR Leader is your source of news, insights, and more for HR, leaders, and people managers. Subscribe today at hrleader.com.au.